Hey everyone, and welcome back to Cognito Key. Today we are talking about something, well, something that can literally bring an economy to its knees. We're going to break down the anatomy of a bank run. It's fascinating for sure, but also kind of terrifying. Just think about it for a second. What if everyone, and I mean everyone, you, me, all of us, wanted our money back from the bank? Like right now, at the exact same time. It sounds simple, right? But what happens next? Well, it's pretty much the definition of chaos. Okay, so let's dive right in. You know, a bank run isn't really about all the complicated financial stuff, the spreadsheets, the market tickers. Nope. At its core, it boils down to something much more human. It's about trust. Or more specifically, what happens when that trust suddenly disappears? So what is a bank run, really? I mean, the official definition is pretty straightforward. It's when a whole bunch of depositors, just tons of them, rush to withdraw their money all at once. And why? It's all driven by one powerful emotion: pure fear. The fear that the bank is going to go bust and that all their savings will just, poof, disappear. Right, and this kind of mass panic doesn't just happen out of the blue. There are always triggers. You've got things like a lack of confidence, maybe sparked by some bad news or a nasty rumor. Then there's poor corporate governance, which is basically a nice way of saying the folks running the bank are making some really bad calls. And sometimes it's as simple as the bank not paying the interest it owes you. Think of each of these as a tiny crack in a dam, and they're all chipping away at the most important thing a bank has: our trust. And here's where it gets really scary. The craziest thing about a bank run is that it's a self-fulfilling prophecy. Yeah, you heard that right. The fear itself, the fear that the bank is going to fail, is the very thing that makes it fail. It's wild. It plays out exactly like a line of dominoes. The first one to fall? Fear. A rumor, bad news, whatever it is, it starts to erode trust. That knocks over the next domino: mass withdrawals. Suddenly, everyone is demanding their cash back. Now see, banks don't just keep your money sitting in a vault. It's loaned out, it's invested. So to get that cash, they're forced to sell off their long-term assets, and fast. And that's the third domino. These hasty sales almost always happen at a huge loss. And that's the final domino. Those losses wipe the bank out. It becomes insolvent. Prophecy fulfilled. And this right here, this is the core problem, the bank's biggest weakness. See, our money, our deposits, are liquid. That means we can demand it back anytime we want. But the bank's assets, they're illiquid. They're tied up in stuff like home loans, car loans, things that get paid back over many, many years. A bank can't just call up your neighbor and say, hey, pay back your entire 30-year mortgage by tomorrow, right? A bank run basically attacks this exact mismatch, and it does it brutally. This quote just says it all, doesn't it? A run may make a solvent bank insolvent. Just let that sit for a moment. It means a perfectly healthy bank, a profitable bank, can be completely wiped out. Not because of bad decisions or risky investments, but just because enough people believe it's going to fail. That's the power of panic. Okay, so people have pulled their money out. The big question is, where does it all go? Well, this kicks off something called a flight to safety. Everyone's scrambling to find somewhere, anywhere, safe to park their cash. And they've basically got three main options. The most common one is to just move it to another bank, one they think is safer. Makes sense. Another option is to buy super safe government bonds or treasury securities. But see, that third option, holding on to physical currency, like stuffing cash under the mattress, that's the one that's actually the most dangerous for the entire system. And that's because that third option, holding cash, is how a problem at one little bank can explode into a massive crisis for everybody. It's the difference between one domino falling and the whole table getting cleared. You see, fear is contagious. It spreads like wildfire. It starts with just one bank losing people's trust. A run on just one bank can quickly turn into a run on the entire system. And that happens when people stop trusting any bank, when they just pull their cash out completely and decide to hold on to it themselves. At that point, the trust that glues the whole financial world together, it just vanishes. And that leaves us with a pretty chilling thought for today's world. You know, we think of a bank run and we picture those old black and white photos of people lined up down the block, right? But now, in an age of digital banking, instant transfers, and social media where rumors spread in seconds, the next bank run might not happen on a sidewalk. It could happen with a click of a button on millions of phones all at once. And on that note, we're going to wrap up this explainer. I hope you found this breakdown interesting. If you did, please do us a huge favor and hit that like button, share it with a friend, and of course, subscribe to Kanono Key for more deep dives just like this one. Thanks for watching.